Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 27th CO2 report of this year, and as usual we're going to start off with the changes in commercials positions, and we've got corn on top of the list with a 26% change in commercials positions, 24 in large speculators, and you may see these changes being larger than average or not that surprisingly large. We've seen similar changes in the past. This, of course, is a bearish change signal, possibly pushing prices down in the near term, talking about a few days. But let's have a look at the 5-year chart and see how extreme this market is at the moment. You may see that we have the most bullish COT Extreme back over here in 2013, and the most, let's say, bearish one back over here in mid 2016, which, as you may see, is a wonderful signal. That actually pushed prices back down, and we're more or less in between those extremes. So I'd say it's really the change signal that could affect prices right now. The last extreme that was more or less significant was this relative bearish extreme, and this one over here a bullish one, but there's anything surprisingly unusual right now over here. So let's just move on and have a look at the Australian dollar, where we have a 25% change in commercials, 22% change in large speculators. These changes are definitely greater than average, coming at a point in time when prices have already declined. So this signal, this bearish COT change signal, may actually be a little bit late for us to act on. Not saying that prices would not continue their decline, but it's of course harder to take a good risk-reward trade on that. Jumping to the 5-year chart, you may see that we are moving away from a relative bullish extreme, although you may see the even greater bullish extremes that we had in the past. And we're, of course, getting closer and closer to bearish extreme levels. You may see that. So there may be a few more weeks before we reach those extreme levels where, as you may see on the chart, and I'm just showing to you these places in on the chart where you can see there was a bit of a halt in the rally. The next market is the British pound. We have a 19% change over there in commercials position, the same bearish change signal as we had in the Australian dollar market. The size of it is again larger, although we see greater changes in the past. But similarly to the Australian dollar, the timing may not be the best, since we already had a bit of a decline last week, so it's of course harder to act on it. Jumping to the 5-year chart, you can see that we are moving away from this significant bullish COT extreme that was the case early this year, and since then you may see commercials have basically decreased their net long positions from roughly 120,000 contracts down to about 25-30,000 contracts, as you can see on the chart. So pretty decent move back over there in their net long positions. You can see that there's of course plenty of space left to reach net short positions of an extreme that I'm just pointing to you, which of course is, as you may see, coinciding with this top in the market. So there's some space left for the market to reach those levels, and until it does, this trend could continue. Let's jump over and have a look at large speculators COT Extreme. We've got the platinum market on top of a list with a 422 report extreme. In large speculators, let's jump to the 5-year chart. We've got 414 report extreme in commercial, so that's over there. Large speculators can be viewed over here. So that is a pretty significant extreme in platinum. This, of course, is a unquestionable bullish COT extreme. You can see prices have gone down, and the report and the extreme signal tells us that prices may actually bottom out soon, and that we could be prepared for a rally to come. The Chicago wheat is our next market with a 350 report extreme. You may see a huge rise last week. You can see that on the chart. But of course, jumping to the 5-year chart, you may see that the extreme has widened dynamically, very fast. In just a couple of weeks, you may see commercials being around 20,000 contracts net short, and now they're below 70. almost 80,000 contracts in actual level. Large speculators, again, similarly to commercials, have jumped to a pretty decent extreme. So Kansas City wheat is telling us that prices are not going to go much higher. At least that is what the stress levels are telling us. New Zealand dollar is our next market with a 219 report extreme in large speculators. We've got a 217 report extreme in commercial. So these are the extreme I'm just showing you right now. Again, we're talking about very large COT extreme levels. This is a bearish extreme level coming at a point in time when prices are at resistance levels. The resistance levels are not far from the price level we're at. So maybe not a bad situation for a trade to the downside, of course, of the market. I'm not telling you it will drop, but the stress level is definitely pointing in that direction. Okay, that was our last market for the review. Of course, don't forget you can look at our other COT charts on our COT charts page for free. And more in-depth and detailed COT analysis is available if you become a subscriber, and I hope you will consider that. Have a great weekend, take care, and see you next week. Goodbye.